Hey everyone, welcome back to Corporate Decoder, where we decode the complex language of business, and today we're diving into Remora Capital Corporation's latest filing. And let's just say it has some interesting tidbits that might make investors raise an eyebrow, or maybe just get a little confused. Before we get into the nitty-gritty, if you like getting the real story behind corporate moves without all the jargon, hit that subscribe button. And hey, we've got a fantastic community over on Discord where we break down these reports further. The link is in the description below. So, what is this Form 8K all about? Think of it as a current report filed with the Securities and Exchange Commission or SEC when big important things happen that the public needs to know about right away. It is like a press release but directly from the company to the regulators, and by extension to us. This particular filing is from Remora Capital Corporation. They are a company incorporated in Maryland. Now, the really interesting part of this report, at least for investors and US observers, is usually found in the details of what they're reporting. This section, item 7.01, tells us they're disclosing something under what is called Regulation FD. What does that mean in plain English? It means they are making information public that could be important to investors, and they are trying to do it in a way that everyone gets the same information at the same time. They don't want to accidentally give a secret tip to one person that others don't get. And what is the big news they're sharing? They issued a shareholder letter. This letter is for the third quarter of 2025, which ended on the 30th of September. This is where the meat of the financial updates usually lies. They are including this letter as an official exhibit 99.1 to this report. Now, here is a bit of legal nuance that is important. They say this information is being furnished, not filed. Why does that matter? When something is filed, it gets a higher level of scrutiny, and the company can be held more accountable for it. When it is furnished, it is more like they are presenting it for your information, and they're putting some distance between themselves and liability if something in it turns out to be wrong or misleading, especially under certain sections of securities laws. It is a way for them to share updates without taking on full legal responsibility for every word in that letter, which is pretty standard for these kinds of disclosures. This section, item 9.01, is all about the documents they are attaching. It lists the exhibits. Here is exhibit 99.1, which is the actual shareholder letter from Remora Capital Corporation for the third quarter of 2025. This is the document that will contain the actual financial performance details we're all so eager to see. We're looking at the shareholder letter dated the 19th of December 2025. This letter should give us a look at how the company performed in the financial quarter that ended the 30th of September 2025. Since they're issuing the letter in December, it means they're a bit behind on getting this information out. Or perhaps they are taking their time to craft a carefully worded message. Let's say for the sake of this analysis that this shareholder letter contains the critical financial data we need to understand Remora Capital Corporation's health. Typically, in these letters, companies will highlight their revenue growth or decline, their profits, and possibly their strategic direction. While the filing itself doesn't contain the detailed financial tables, the shareholder letter it references absolutely does. Imagine this letter as a story, and we are here to find the plot twists and the character arcs, especially when it comes to their financial journey over the last 3 months of their reporting period. We'll be looking for any signs of growth, any areas of concern, and what this might mean for their future prospects. Now let's pretend we've opened that shareholder letter, exhibit 99.1, and we're looking at the numbers. You would typically see key figures like total revenue, net income, earnings per S-share, and perhaps comparisons to the same period in the previous year. For instance, if they reported a revenue figure of, let's hypothetically say, $50 million for the quarter, and last year it was $40 million, that is a 25% increase. That is a strong sign, meaning they're bringing in significantly more money. But if the revenue dropped from $50 million to $40 million, that is a 20% decrease, which is a red flag. It suggests they are selling less, or their prices are lower, and that could point to market challenges or increased competition. We would also look at net income, which is the actual profit after all expenses are paid. If revenue is up but net income is down, it means their costs have increased, potentially hurting their profitability. For example, if their net income dropped by 10%, it means for every dollar they earned this quarter, they kept 10% less than they did last year. This could be due to rising operational costs, increased marketing expenses, or perhaps a less favorable product mix. Another number to watch is earnings per S-share, or EPS. This shows how much profit is allocated to each outstanding share of stock. A rising APS is generally a good sign for shareholders, as it suggests the company is becoming more profitable on a per-share basis. If APS is falling, it implies the opposite, and that could put pressure on the stock price. Let's imagine their letter also discusses key performance indicators, or KPIs, specific to their industry. For example, if Remora Capital Corporation is in the lending business, they might talk about loan origination volumes, interest rate spreads, or delinquency rates. If loan originations are down significantly, it means fewer people or businesses are borrowing from them, which directly impacts their revenue potential. If delinquency rates are up, it means more borrowers are struggling to repay, which can lead to higher loan loss provisions and eat into profits. Now, let's consider the broader context. Remora Capital Corporation is identified as an emerging growth company. This designation means they benefit from certain regulatory accommodations, allowing them to phase in new accounting standards over a longer period. It is a nod to their size and stage of development. However, the filing also asks if they've elected not to use this extended transition period. If they have, it signals a commitment to adopting the latest accounting rules sooner, which could mean more transparency but also potentially more stringent reporting requirements. In terms of business direction, the mere fact that they are issuing a shareholder letter for the third quarter of 2025 suggests they are actively managing investor relations and providing updates. The content of that letter, which we are hypothetically analyzing, would reveal whether they are on a growth trajectory, consolidating their position, or facing headwinds. Are they expanding into new markets? Are they launching new products or services? Or are they facing challenges that require them to cut costs or divest certain assets? The answers to these questions are crucial for understanding their strategic approach. Looking at potential risks, a company like Remora Capital Corporation, especially if it is in the financial services sector, would be exposed to interest rate fluctuations, economic downturns, and regulatory changes. The shareholder letter might touch upon these risks, perhaps explaining how they are mitigating them. For example, if they mention rising interest rates as a challenge, they might also highlight their strategies for hedging against this risk or how their business model is resilient to such changes. In our hypothetical exploration of the shareholder letter, we would also be looking for any leadership changes or significant corporate events. While this particular Form 8K doesn't detail specific executive appointments or departures. Shareholder letters sometimes include remarks from the CEO or other senior leaders offering insights into their vision and the company's performance. Anything that suggests a shift in leadership or strategy could be a major signal for investors. So to wrap up our hypothetical analysis of what is in that shareholder letter, if Remora Capital Corporation is showing strong revenue growth, increasing profits, and a clear strategic plan for the future, that is a positive sign. It suggests they are navigating their industry effectively and creating value for shareholders. However, if they are experiencing declining revenues, shrinking profits, or facing significant unexplained risks, it calls for a more cautious approach. As Warren Buffett would say, we don't have to be an expert in every company, we only have to be able to understand its business well enough to determine its economic characteristics. In this case, understanding those economic characteristics hinges on the financial details within that shareholder letter. Without those numbers, the filing is just a formality. Given the information presented in this Form 8, particularly the reference to the shareholder letter, Remora Capital Corporation seems to be in a phase where it is providing updates on its quarterly performance. The fact that it is an emerging growth company could mean it is still building its operational capacity and market presence. The delayed release of the letter, noted by the December filing date for a quarter ending in September, might indicate a deliberate process or perhaps some internal challenges in consolidating information. The key takeaway is that the true value of this filing for investors lies in the detailed financial and operational insights contained within Exhibit 99.1, the shareholder letter. If that letter paints a picture of robust financial health and a clear path forward, it is a good sign. Conversely, any signs of financial strain, like declining revenues or increasing costs without a corresponding increase in output, would warrant closer scrutiny. The company's strategic direction, as communicated in that letter, will be paramount in assessing its future potential and any inherent risks. Alright, that is our deep dive into the Remora Capital Corporation's Form 8. K-filing, what is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more corporate decoding. Don't forget to check out the Discord in the description for more in-depth discussions. Thanks for watching, and we'll see you next time.